Felix here. As we are slithering into this recession, the Fed is going to U-turn. How are they going to do that? Well, I've looked at the last 80 years of Fed U-turns for you to tell you exactly how they're going to do it, because there's really only one strategy. Well, maybe 1.5 strategies. We'll run through them here. Before we do that, I want to encourage you to download the full S&P 500 benchmark. It's completely, utterly, butterly free. It's available at felixfriends.org/SP500. It's free, felixfriends.org/SP500. Did I say it was free? It's going to be incredibly useful because you'll know of all the major US listed companies. Of course, imagine you own quite a few of them, or you might want to own quite a few of them. You'll know their ROIC numbers, their margins, their long-term earnings growth, their institutional ownership, their short ratios, all that kind of stuff. That's incredibly important. And if you enjoy macro, if you enjoy policy updates, then let me know in the comments down below and I'll keep doing them. Thank you very much. Now, of course, the highlight is always the greatest disclaimers in the world. None of the following is financial advice. Read the disclaimer, enjoy it, do a little merry dance, and let me show you what the Fed's been doing. Well, the Fed's been, mostly wrong. And, they are economists, so they're expected to be mostly wrong. I'm not going to run through all of these, but these lines here essentially are showing you different times the Fed's inflation expectations. So in March 2021, they thought the orange line here was going to be inflation. And then say in December 2021, they thought it was going to be this dotted orange line here. So obviously much, much higher inflation. And then in March this year, they thought it was going to be this pinkish line. And then in June, they thought, oh no, it's actually going to be the line at the top. So they keep getting that wrong. And that's, as I say, they are economists, they are to be forgiven. I used to be one of those. I know you're basically trained to be wrong. And what's the market doing with that? Well, the Fed is giving us expectations, guidance as to where the fund rates, the Fed interest rates is going to be. And the June one at the moment is they're going to telling us that at the end of 2023, the end of 2022, we're going to have 3.8% interest rates. And it's then going to come down gradually to 3.5% by the end of next year. That's what the Fed's telling us. Is the market believing them? Well, yes and no. So this is the 2-year fund rate, the 2-year US bond rate, which is a pretty good approximator for what the market expects the interest rate could be. And it's sitting at 3.2% here. Now, it's gone up a lot. So the Fed's had a lot of impact, but it isn't quite at 3.8%, right? We are missing 0.6% here. So we're believing the Fed, but not quite as much. And why is that? Well, it's the great big R. It's the, the swear word of the year, the great big recession. And as we are slithering into this recession, and I think everybody believes that we are, except for the White House, and they'll probably come around November, I would imagine, just after. And why? Because demand seems to be softening. Chinese economy is slowing. We're seeing companies reporting that they have a lot of inventory and that they didn't particularly need, maybe a bit of overstocking. Overstock.com's purchasing managers are doing somersaults in their little purchasing offices. That would achieve a reduction in demand and a reduction in inflation. Now, why are these inflation numbers that the Fed is giving us up here, why are they coming back down in 2023, like Kat asks in the background, to like 2% and then 2024 to like really 2%, sort of 2.5 to 2%? What's the magic here? Is that just wishful thinking? Have they been smoking too much at the Fed or enjoying too many champagne cocktails in the Hamptons? Well, no, not really. If you think about it, inflation is, you are very noisy. Right, this is the monster causing all this noise here. I'm sorry. Think about oil prices in 2021, where some say there was something like $70. And then in 2022, they've been something like $100. So that is a lot of inflation, right? That's, 40% or something like that inflation. Now, then you take this to 2023, say, and say you're a pessimist on oil and say it just stays at $100. Well, what's the change? 0% inflation. So even though overall you've had this 40% increase year on year, you've had zero. That's why inflation sort of takes care of itself, unless those flag-waving trade unionists get their hands on inflation and they demand higher and higher and higher wage increases. And that is why the Fed is so very focused on destroying jobs. Very simple. the whole commodity thing takes care of itself eventually, unless you think oil is going to keep going up to 150 and 200 and 300 and so on. It doesn't seem that way because we've got less demand, and we possibly got, the lovely Iranians going back to that agreement and that kind of thing. So we might get a little bit more output. So moving on. The other thing, of course, that is going up and that the market isn't necessarily believing, and by the market I mean you, is my options portfolio is up 136% so far this year. 136% this year, and you might not believe that, and that's completely fine. A lot of people don't. But literally send me an email and I'll send you all of the trades for, these are just the August trades, and you can see what it is for yourself, because I'm 100% transparent and you can see exactly what it's all about. So how can you do that? Well, you send me an email at felix@goatacademy.org, O-R-G, and I'll send you that over so you can see what it's all about. Now, what's the Fed then going to do as the recession is finally acknowledged? Well, normally there is one strategy. The traditional strategy is very simple. That is to cut interest rates. That's this policy here. How can they do that when interest rates are at zero? They can't, and that's why they want to hike them up as fast as they can. So say they hike them up to the 3.2% the market expects. Well, they could slice and dice quite a few 0.25% interest rate cuts over the next year or so, right? So that's the soft approach. Now, the slightly more unconventional approach is forward guidance, which is what the Fed is definitely preaching at present. Telling us what they're going to do. Therefore, the market expects it, and therefore money becomes cheaper and people start investing more, that kind of thing. And then asset purchases, which is basically money printing. And they're very good at that. And I think they really, really enjoy printing a lot of money. They printed 40% extra US dollars just during COVID. So they're likely to do that again, probably at lower rates. So this whole money shredding thing that they've got going on at the moment, QT, quantitative tightening, is never going to get completed in my view. And then the last one, the last but not least scenario number 3, is that a US president and whoever is in power jumps up and down and goes, I'm going to do stuff too. I'm helping too. And look what we're doing. And that's what is nicely called here strengthened automatic stabilizers. Economists are odd people, aren't they? What is that? Well, it's basically socialism. And what that is essentially is mailing checks out to people. So kind of like, student loan moratorium, that's socialism. And I'm not judging it. I'm just saying what it is. It's basically everybody paying for the people who are not paying for things and mailing out checks to everyone. And there has been this movement for the last 20, 25 years or so to get a sort of basic wage out. And I'm not judging it, but I'm just saying I think that's what's going to come out of one of the coming recessions. It's just everybody has sort of a guaranteed level of income, and it stops them from, rioting and throwing cans of sardines at people and that sort of thing. I don't know why cans of sardines. I have a cat sitting next to me, so she makes me think of sardines. So is this going to happen anytime soon? And what should you be doing about it? Well, this little chart here is the Fed's founding even, 1912. It was founded in a smoky, booze-filled room somewhere probably, to right here, right now. And then you get all the horrible little events with the little numbers, which I don't need to read through for you. But what you can see is that the thing just keeps going up. And I think that's really the one thing I want you to take away from this, is that as long as you're invested and you're in the market, you're going to make a heck of a lot of money. If you'd invested in 1912, you would have invested, $100, and you'd now have, $50,000 or something like that, simply by holding the Dow Jones Industrial Average, which is probably the most idiotic index ever convened. Why? Because it's weighted by share price, not by market cap. That's a really idiotic thing to do. So what am I saying? I'm saying the Fed is going to turn around. We are going to get a recession, and it'll all be fine. That's what I'm saying. You just want to keep investing in good companies, really. Let me just show you here a little bit more proof. Yesterday, this is from my brokerage. I made $1,000 with essentially one trade. It was a Microsoft trade, very small trade. $2,500, made a very nice return. And I closed out of HP, and I still have these 3 Docu, AVG Go, and LCL trades open, who are also making money, not a lot of money, but they are making some money. And I need to set up another 15, 20 trades or so, which I will do probably today, and I will live stream for you if you are on the coaching program. So check it out if you haven't already. To how to make money with us. Two ways of doing that. You can simply enroll in the Master Options program, 100 lessons plus. You get to see me trade live every week, and lots of Q&A access to me and my coach. And secondly, if you want to really be, gung-ho about it. Is that a term one is still allowed to use? Probably not, right? felixfriends.org/coaching. Check that out. And the 2,500 students we have are absolutely tremendous, and I absolutely love them. But my intention is to get this to 100,000. So the advantage of being somewhat early here is that you actually still have access to me, and that, of course, will over time dissipate, just because I won't be able to be in every place, unless we be able to sort of clone me or something, which, who knows. So thanks for watching. Thanks for tuning in. See you on the next one.